Welcome back to Deep Market Insights, your trusted space for decoding the stories behind the numbers. I'm your host, and today we're unpacking the latest developments as of September 27th, 2025. The US markets, global sentiment, and crypto turbulence all converged this week to create a fascinating picture of resilience, risk, and recalibration. And to dive into this with me, I have our guest analyst joining in. Let's start with US equities. The week saw a three-day losing streak, but by the end, indices seemed to stabilize. The Dow closed just under 46,000, the S&P 500 at about 6,605, and the Nasdaq near 22,985. Not exactly a collapse, but investors are clearly on edge ahead of the inflation print. What's your take?
That's right. What stands out is that, despite the pullback, the indices are still hovering near record highs hit earlier in the week. The U.S. economy itself looks strong. GDP growth revised to 3.8% for Q2 and jobless claims falling. But here's the catch. Strength in the economy makes it harder for the Federal Reserve to justify aggressive rate cuts. That tension is what's keeping investors cautious.
Interesting. So in a way, good news for the economy becomes bad news for rate-sensitive equities. Now tech had quite a rough patch, Tesla down over 4%, Oracle down 5.6%, but Intel jumped on Apple investment buzz. Is this rotation within tech telling us something deeper?
Absolutely. The market's rewarding companies with clear forward momentum. Intel, tied to Apple's investment, fits that narrative. But firms like Tesla and Oracle, which are facing execution or competitive headwinds, are taking the hit. This shows selective confidence in tech rather than broad-based enthusiasm.
Got it. Shifting globally, markets seem jittery. Inflation is creeping back into the conversation and volatility is elevated. How do you read that?
Globally, it's a balancing act. Central banks are walking a tightrope, trying to control inflation while not derailing growth. The second half of 2025 is projected to be slower in terms of global expansion. So investors are now hyper-focused on monetary guidance and economic support levels. Any hawkish surprise could amplify volatility quickly.
Speaking of volatility, crypto markets had a brutal month. Over 160 billion wiped out, Bitcoin sliding under 111,000 from its August peak of 124,000, and Ethereum under 4,000 with its steepest weekly drop since June. What does this say about investor sentiment?
It says fear is dominant. Forced liquidations spooked the market, and regulatory uncertainty continues to weigh heavily. Yes, Bitcoin managed a 0.8% uptick in the last 24 hours, and Ethereum gained just over 1%. But those are minor recoveries compared to the broader slump. Trading volumes have dried up, which signals that investors are hesitant to commit fresh capital.
So equities are cautious but resilient, while crypto's still in recovery mode. If you had to summarize, what should investors watch most closely next week?
Two things. Inflation data in the US, because it will dictate the Fed's tone, and stabilization signals in crypto volumes. Together, they'll shape cross-asset sentiment.
Excellent insights. Thank you for joining me today. To our listeners, here's the big picture. US equities are holding near highs despite jitters, global markets are treading carefully around inflation risks, and crypto investors are licking their wounds after a major correction. It's a market full of resilience on one side and fragility on the other.